March 12, 2008. Bear Stearns collapses. The Federal Reserve opens the money printer for the first time in modern history, and nobody realizes they just watched the beginning of the end of the dollar. Not a recession, not a market correction. The actual beginning of Stage 5, in a pattern that has killed every reserve currency for 600 years. Here's what they're not telling you. There's $70 trillion in dollar-denominated debt scattered across every country. You think your savings are safe because they're in dollars. You think the system is stable because it hasn't collapsed yet. But the Portuguese thought that in 1550. The Dutch thought that in 1710. The British thought that in 1940. They were all wrong, and the mathematics says you're wrong too. Because right now, in 2025, the United States dollar sits at stage 5 of a 7-stage collapse cycle. And what makes this different, what should genuinely terrify you, is that when the dollar goes, it won't just bankrupt a country. It will restructure the entire planet. Every previous collapse was regional. This one is global. And you're holding the currency that's bleeding out. Let me walk you through something that will reframe everything you think you know about money, about safety, about the future. There's a sequence, a biological inevitability, really, that plays out with every reserve currency. 7 stages. It's happened 4 times across 6 centuries, and every single time, the nation holding the reserve currency believed they were immune. They believed the pattern didn't apply to them. This is about mathematics and human nature, and those two things don't negotiate. The Portuguese real dominated the world from 1450 to 1530, 80 years. Then it died. The Dutch guilder ruled global trade from 1640 to 1720, 80 years. Then it died. The British pound reigned from 1815 to 1920, 105 years. Then it died. And the US dollar took reserve status in 1944. That was 81 years ago. We're not at the beginning of this story. We're near the end. Controlling the choke points that global commerce flows through. Portugal in the 1450s didn't just have ships, they had warships stationed at Goa, Malacca, Macau. If you wanted spices from Asia, you needed Portuguese permission. If you wanted to trade with India, you paid Portuguese tariffs. Their cannons controlled who could trade and on what terms, and that made the real the only currency that mattered. The Dutch perfected this in the 1600s with the Dutch East India Company, which wasn't a company, it was a military power with 40 warships and 20,000 soldiers. If you wanted to trade, you needed guilders. And the United States? 11 aircraft carrier battle groups, more than the rest of the world combined. But here's what history teaches. Military dominance is the beginning, not the guarantee. Because once you control the trade routes, stage 2 kicks in. Portugal in the 1500s bought spices and silk from Asia and sold European goods at 10 times markups. They didn't need to tax their own people. The Dutch did this even more systematically. Amsterdam became the warehouse of the world. They bought low, sold high, captured the spread, and built the richest city on earth. Britain in the 1800s ran the largest trade surplus in history. They exported manufactured goods and imported raw materials at prices set by British buyers. After World War II, America was the only industrial power left standing. Europe and Asia were rubble. The U.S. exported machinery, steel, automobiles to the world. The trade surplus was so large that dollars flooded foreign central banks faster than they could spend them. U.S. gold reserves swelled to over 20,000 tons, more than the rest of the world combined. This is stage 2, massive trade surpluses, and the U.S. dominated it for 25 years. But here's where the pattern shifts, because stage 2 doesn't last. Eventually, the reserve currency nation stops producing and starts consuming. They stop exporting and start importing. The surplus reverses into a deficit, and the deficit becomes permanent. That's when stage 3 begins. Stage 3 is formalization of reserve status, the tipping point. At some moment, the world officially adopts your currency as the reserve. For Portugal, it happened in the early 1500s when European and Asian merchants began writing treaties denominated in reals. For Britain, it was 1815 at the Congress of Vienna after the Napoleonic Wars when the pound was explicitly recognized as the global standard. 44 nations met and formally agreed to make the dollar the world's reserve currency. Other currencies would peg to the dollar would peg to gold at $35 per ounce. It was the most explicit formalization of reserve status in history. For the world to have enough dollars for reserves and trade, the U.S. must run deficits. The U.S. must send dollars abroad. So every reserve currency, once it reaches stage 3, begins the irreversible slide toward stage 4. Stage 4 is deficit spending and living beyond your means. The reversal. Portugal saw this in the mid-1500s. The trade surplus disappeared. Instead of exporting goods, Portugal was importing everything: grain from Sicily, textiles from Flanders, manufactured goods from across Europe. They paid for it with gold from Brazil and Africa, but they weren't producing wealth. They were spending accumulated wealth. The Portuguese crown spent lavishly on palaces and churches, while military expenses to maintain the empire drained resources. And here's the key. They didn't notice the problem because the money kept flowing. As long as Brazilian gold kept arriving, they could keep spending. But the gold wasn't infinite, and they weren't building anything productive. They were consuming. Why work in factories when you can live off accumulated capital? Dutch investment shifted from production to finance. Britain, in the early 1900s, faced the same crisis. By 1900, Britain was running trade deficits, importing food and manufactured goods, paying for it with returns on overseas investments. Centuries of accumulated wealth invested across the empire generated enormous income, but Britain wasn't creating new wealth. They were extracting wealth created elsewhere. British manufacturing declined. By the 1980s, the deficit was growing rapidly. By the 2000s, the U.S. was running the largest trade deficit in history, $800 billion annually. The U.S. imports far more than it exports: consumer goods, electronics, automobiles, everything from abroad. How is this financed? By exporting dollars, printing currency and exchanging it for real goods. But this is living beyond your means, consuming more than you produce. And it's the exact same pattern that preceded the collapse of every previous reserve currency. Stage 5 is currency debasement and money printing, the desperate measure. Portugal did this in the 1550s, reducing the silver content in coins and issuing more currency than they had metal to back. Inflation surged, prices rose, merchants began refusing reals or demanding more of them. The currency's purchasing power eroded, and by the 1570s, international merchants started preferring other currencies for trade. The Dutch did this in the 1700s. The guilder had been backed by conservative monetary policy, but by the mid-1700s, the Dutch government was borrowing heavily to finance wars and maintain their empire. When borrowing became too expensive, they inflated the currency, printing money to cover deficits. The guilder's value declined, and by the 1780s, it was no longer the preferred currency for international trade. Britain debased the pound through 2 world wars. World War I forced them to print money and abandon the gold standard temporarily. They returned to gold in 1925 at an overvalued rate, which caused economic devastation. Each devaluation eroded international confidence, and by the 1970s, the pound was no longer a reserve currency. It was regional. And the United States entered stage 5 in 2008. The financial crisis forced the Federal Reserve to print money on a scale never seen in peacetime. Then COVID hit, and $7 trillion more was printed from 2020 to 2022. The money supply expanded faster than at any time in American history outside of war. This is currency debasement, not by reducing metal and coins, but by expanding the supply of fiat currency, and the effect is identical. And here's the difference. The dollar is global. When the Fed prints, it exports inflation to the entire world. Other nations watch their dollar reserves lose value. Their imports from America become more expensive. This is stage 5. This is where confidence begins to crack. And once confidence goes, stage 6 follows fast. Stage 6 is loss of confidence and the search for alternatives, the breaking point. This is when the world starts looking for exits, when trust in the reserve currency erodes and nations begin shifting reserves elsewhere. Portugal lost confidence in the 1570s and 1580s. International merchants began demanding payment in Spanish silver or Venetian ducats instead of reals. Trade contracts were denominated in other currencies. Asian merchants who had accepted reals for decades started refusing them. The Dutch guilder lost confidence through the 1700s. European powers began holding reserves in other currencies. The British pound lost confidence rapidly after World War II. In 1945, Britain owed enormous war debts. International holders lost a third of their value overnight. Confidence collapsed. Nations shifted reserves from pounds to dollars. The signs are everywhere. China and Russia began reducing dollar reserves in the 2010s, buying thousands of tons of gold instead. Russia liquidated nearly all its U.S. Treasury holdings after 2014 sanctions. The BRICS nations announced plans in 2023 for a BRICS currency. It hasn't launched, but the fact it's being discussed is significant. Saudi Arabia, which has priced oil in dollars since 1974, the foundation of the petrodollar system, began accepting yuan for oil sales to China in 2023. This breaks a 50-year precedent. Central banks globally are diversifying reserves. The dollar's share has fallen from 72% in 2000 to 58% in 2024. That's a 14 percentage point decline. Even small nations like Thailand, Malaysia, and Indonesia are negotiating trade agreements that settle in local currencies instead of dollars. But because they see the same pattern that destroyed every previous reserve currency, endless deficits, currency debasement, loss of purchasing power, they're not waiting for stage 7. They're positioning now. The economy is too large. The system is too entrenched. This is exactly what the Portuguese thought in 1550. This is exactly what the British thought in 1940. They all believed they were exceptional. The transition from confidence to collapse compresses. Wealth doesn't erode, it evaporates. Savings don't lose value slowly. They lose value in months, sometimes weeks. Stage 7 is replacement and collapse, the end. This is when a new currency rises to replace the old. The Portuguese real was replaced by the Spanish silver peso in the late 1500s. Spain had conquered vast silver mines in the Americas. The transition happened over 2 decades. By 1600, the real was irrelevant. The Dutch guilder was replaced by the British pound in the late 1700s and early 1800s. The pound was backed by British manufacturing and trade power. The transition took about 30 years. By 1815, after the Napoleonic Wars, the pound was the undisputed global standard and the guilder was regional. The British pound was replaced by the US dollar from 1945 to 1960. The transition was formalized at Bretton Woods, but took years to complete. The dollar was the only currency that could serve as global standard. The pound collapsed in a series of devaluations, and by 1967, it was clear the dollar had fully replaced it. So, what replaces the dollar? That's the question everyone's asking, and the answer isn't clear yet because we're not at stage 7. The replacement currency comes from the nation with military dominance over trade routes, a trade surplus, and productive capacity. Or maybe technology enables something new, a digital currency backed by a commodity or algorithm. Bitcoin maximalists think crypto will replace fiat, but governments won't voluntarily cede monetary control to a decentralized system. The most likely scenario is a messy transition, a period of multipolar currency competition where several regional currencies are used in different trade blocs. The dollar in the Americas, the euro in Europe, the yuan in Asia, gold for settlement between blocs. But it's how transitions happen when there's no clear successor. Now let me show you why this matters to you. It destroys ordinary people's savings and wealth. Portugal's collapse in the late 1500s caused economic depression across the empire. Merchants who held reals saw their wealth evaporate. The Dutch collapse in the 1700s devastated Amsterdam's middle class. British citizens who held pounds, who had government bonds, who had pensions denominated in pounds, they all lost purchasing power as the currency devalued repeatedly. And the American collapse is happening in slow motion right now. Every dollar you hold is losing purchasing power. And since 2020 alone, the dollar has lost roughly 25% of its value through inflation. Your savings, your paycheck, your retirement account, more inflation, more loss of purchasing power, more nations dumping dollars. And when stage 7 arrives, when the replacement happens, there will be a moment of collapse, a currency crisis where the dollar could lose 50% of its value in a matter of months. When the real collapsed, it affected Portugal and its trading partners. When the guilder collapsed, it affected Amsterdam and Northern Europe. When the pound collapsed, it affected Britain and the Commonwealth. But when the dollar collapses, it's global. The dollar is embedded in every economy, every central bank, every trade transaction. Oil, gold, wheat, everything is priced in dollars. $70 trillion in global dollar-denominated debt sits across every continent. This isn't just a currency shift. It's a restructuring of the entire global financial system. And restructurings are never smooth. They're painful, chaotic, and destructive to existing wealth. Let me be very clear about what I'm not saying. I'm not saying the dollar will collapse tomorrow. The timeline says we have maybe 10 to 20 years before stage 7, maybe less if the transition accelerates, maybe more if the US can somehow break the pattern. It requires reversing the deficits, stopping the money printing, rebuilding productive capacity. And democracies don't vote for pain. They vote for comfort, for stimulus, for printing money to avoid hard choices. So the pattern continues. Stage 6 accelerates into stage 7, and the people who understand this position themselves accordingly. They diversify out of pure dollar assets. They hold real things, real estate, productive businesses, commodities. They watch the indicators. And when stage 7 arrives, when the replacement happens, they're not caught holding a currency that's collapsing. They're holding assets that maintain value across currencies. This is what the Portuguese merchants who saw the real collapsing did. They shifted to Spanish silver. This is what the Dutch bankers did when the guilder declined. They moved wealth to London. This is what the British elite did after World War II. They moved wealth to dollars and dollar assets. And this is what smart money is doing right now. Not all at once, not in a panic, but systematically, quietly, over years. So watch the indicators of stage 6. Watch central bank reserve data. If you see accelerating declines in dollar reserves, that's confirmation the transition is speeding up. Watch trade agreements. If gold surges, it means the world is fleeing fiat currencies generally. Because the reserve currency death pattern isn't a conspiracy theory. It's a historical cycle documented across 6 centuries. 7 stages, 4 currencies, and now a 5th. Let me show you something that should genuinely terrify you. The timeline. The Portuguese real lasted 80 years as the reserve currency, 1450 to 1530. The Dutch guilder lasted 80 years, 1640 to 1720. The British pound lasted 105 years, 1815 to 1920. Each currency lasted roughly 80 to 110 years before displacement. The US dollar achieved reserve status in 1944. That's 81 years ago. We're at the average lifespan, and we're exhibiting every symptom of late-stage decline. The pattern says what comes next is stage 7, replacement, and history doesn't negotiate. It repeats, not because it's destiny, but because human nature and mathematics don't change. Nations that debase their currency lose reserve status. It's happened 4 times. It's happening again, or whether you will be the liquidity that transfers wealth to those who did. The pattern is clear. The timeline is evident. The dollar is in stage 5, and history says stage 6 and 7 follow, not as possibilities, but as probabilities bordering on certainty. This is how reserve currencies die, not with invasion or catastrophe, but with mathematics. Slow, then fast, ignored, then undeniable.